Okay, I think I'm live. Let's go ahead and put my camera on. Hey everybody, this is Greg Lewis, Marketing Director for Metastock, coming at you from my basement, aka the temporary Metastock studio. Wow, I was just reviewing some of our old videos and realized that the last time, excuse me, I think I was the last person actually that did a webinar from our studio, and that was 3 months ago, almost to the day. We have been doing from home presentations for about 3 months now. I'm not telling you anything you all don't know. It's been an interesting and trying and weird time for all of us, especially around the markets. But I have to say, so far as the market's concerned, it's been an interesting time, to say the least. And we're very much looking forward to today's speaker, Vince Vora. And I can see somebody's already chimed in about how awesome Vince is. I have to agree, Vince is very awesome. Today, Vince is going to be talking about how to trade in a coronavirus storm. So that's going to start here in about 3 minutes. Hey, as you're coming on, I can see some people are already coming on. Go ahead and chat in the chat and let us know who you are, where you're listening from. We always love to hear from people. And hello, RL, and thank you for mentioning Vince is the best. A couple things I want to say before we start in 3 minutes. One moment. Okay, so if you go to our website, you'll see right there on top is a banner that says our spring event is almost over. And if you just click on that banner, trying to do that now. If you just click on that banner, it will take you to our spring event, which I've mentioned repeatedly has been extended. Well, that extension is almost over. It ends on the 30th. So what is that next? I can't remember. At any rate, it's a great opportunity to get Metastock if you don't have it. It's a great opportunity to get upgrades to Metastock if you'd like, if you're using an older version of Metastock. It also has great deals on Metastock, add-ons, and data, and it's just a great thing for you to check out. And that's just the easiest way to go there, is to go to our homepage and click on the banner at the top. And again, you've only got 5 or so more days until that ends. Another thing I wanted to mention, if I can click on here behind my own picture. On Friday, you guys probably already know that every Friday we have a market recap. This Friday is Oscar Carboni. Oscar is one of our most popular speakers. He was actually at our last summit, and he did very well, and he's very popular, so that's why we decided to invite him to our weekly recap, and I know he's going to be great, so make sure to tune in. The best way to do that is go to YouTube. I've got to check and see how much time we've got left. Oh, we still have a little time left. The best place to do that is go to YouTube and just youtube.com/Metastock, and you'll see this picture that I'm seeing, and just click on that little bell down there to remind yourself, and you'll be all set to go. All right. So we got about a minute and 42. I see that Mosine has, I'm sorry, Mosine. So many people come on in whose name I will never know how to pronounce. I apologize. He's logged in. We got a lot of people logging in, but not too many people saying hi. So don't hesitate to say hi. We'll be starting here in about 1 minute. I'm going to go ahead and mute myself and make sure that the presenters are ready to roll. I do see that Vince and Jeff are both on GoToWebinar. So don't hesitate to chat and ask questions here on YouTube, because we do monitor both chats on both YouTube and GoToWebinar. And Jeff is very good about passing that information on to Vince, who may or may not be monitoring chat on YouTube. All right, thank you so much, and we'll see you back in about a minute.
Hey everybody, Jeff Gibby. I hope you're doing well. Thanks for coming today. We have a very good speaker queued up and ready to go with us, Vince Vora. I'm going to read a little bit of a legal disclaimer to get us all nice and warmed up. Let's go ahead and do that. So today's demonstration is designed to instruct you on using Metastock and the company's software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. Information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So I want to thank everybody for coming, whether you're on the GoToWebinar or the YouTube platform. Thank you for being here today. Thanks for spending some time with us. Today we do have Vince Vora, and as RL is saying in the YouTube chats, Vince is the best. So I agree with that. Vince does such a good job. We love having him on here. He's a regular guest. We've been working with him for a while now. It's been years. I probably at least 6 or 7. I don't know, but it's been a long time. He's a great partner. We really appreciate the work that he's done and bringing his methods over to the Metastock software program. And that's what he's done. He's gone in. We've coded some methodologies around what he does and what he uses. Those methodologies he's going to show you today. It's called the Veracity software. They've actually been very, very popular with our user base. They're actually very popular, very internal. A bunch of even my employees use the Veracity software to get their trades. But particularly, I think what I want to mention about Vince today is he does a really good job of teaching. I really like kind of how methodical he is and how he really kind of, when he says something, you have a tendency to understand what he's saying and it makes sense. And he does a really, really good job, I think, in just general education. And so that's what I've got to say about you, Vince. Let's go ahead and bring you on here.
Hey, Jeff.
I'm doing well. Thank you, Jeff. Thanks for having me on. Let me
Jeff, can you all hear me?
My camera and eventually my screen. Hey, can you see me?
I can see you. Greg, are you trying to say something?
Jeff,
excellent.
Can you hear me?
I can hear you, Greg.
I'm sorry. Did you do the disclosure?
Yeah, I read a legal disclaimer.
You did?
I did, didn't I?
Oh,
yes.
I'm so sorry.
I must have warmed everybody in, Mr. Lewis.
I must have been so busy working at the controls and the knobs and the dials, I didn't notice. I apologize. Excuse me for interrupting, and I'll let you go right ahead. Thank you, Vince, for joining us.
Okay, let's go ahead and get your screen up here, Vince.
Okay.
I was like, yeah, I thought I did that. Did I forget about something? All right, I can see your Veracity screen. I'm gonna get out of the way.
Okay. Thanks again, Jeff. Thanks for having me on, and welcome everybody. Good to be with you this afternoon. It's an interesting day on the markets, that's for sure. We had some selling going on. We'll look at a number of charts, but by the end of it, the Dow was down a little over 700 points. The Nasdaq also came well off their high, closing down 222. Speculation is that it's all COVID related, but we'll go through the charts. We'll see what the charts are telling us. I'm happy to be with you here today and share with you what I consider to be my baby, and that's Veracity, a system that's based solely on technical analysis that took several years to come together. The basics of it came together in about 2 weeks, but then I spent a number of years working on this, mainly because I took a sizable loss very early in my career. When I thought I knew a lot about the markets, but actually didn't, the market slapped me around a little, and I took a sizable loss. Now, looking back, that's actually what made me the trader I am today, so I'm thankful for it, but it was a very painful experience, and I vowed at that point to not only learn how to trade properly, but to limit my risk no matter what. I absolutely hate risk. I can't, if I could, it's a family show, but if I could use a stronger word than hate, I would. I absolutely despise risk. And so everything I do, I look at risk first and try to minimize, as much as possible. So what took so long here was trying to keep the risk to an absolute minimum without capping the upside, because it's easy when you take risk, you open up the upside. When you clamp down on risk, usually you clamp down on your upside. And so that's what took me so long to figure out. But we finally did it, and we've been trading with Veracity for many years. So I'm really happy to share it with you. As Jeffrey mentioned earlier, there are risks with trading. It can be risky. So please don't trade with real money until you are completely comfortable with the system you are using. As he said, I'm Vince Vora. I'm the head trader here at Trading Wins, and I've been in this business for well over 30 years. I've created a number of strategies and trading systems, but this is my personal favorite. And over the last several years, like Jeffrey says, it's been now about 6 or 7 that we've been working closely with Metastock, but also during that time, I've been very focused on coaching and have really, really enjoyed it. So in today's presentation, what I'm going to start with is a slide that has my 5 money management rules. You can't really trade unless you have both a trading plan, a set of rules that identify entries and exits, and a money management plan. This is what really keeps you, or should keep you, from sustaining any kind of sizable loss and allowing you to take advantage of the upside. So one promise I will make you today is that if you follow this set of money management rules, you will never take a big loss again. I know it's a big statement, but it's absolutely true. I have followed these ever since taking that loss, and I can tell you any loss I have taken over many, many years has been minuscule. I'll show you exactly how we do that. Also, I'll talk about the components that make up Veracity, and then show you how it works and why it works, but more importantly, how it can work for you. And if you have any questions, by all means, feel free to type them in. Jeffrey will keep an eye on the chat. He can jump in and interrupt me at any time with a question, but also we'll leave some time near the end to make sure we answer all of your questions here today. So let's get started with our money management plan. And the very first item here, number 1 out of 5, I say trade with a positive mindset. What I really mean is make sure you're not distracted and that you're feeling well. I've coached hundreds and hundreds of students, and one common aspect is that mistakes happen when they're either distracted or are feeling a little under the weather or just off that day. They're not in the right mindset. Before you sit down to trade, make sure you turn off all distractions. You can watch CNBC or Bloomberg or any other business channel if you want. What I do is turn the volume off. That way, the screen's in front of you. If there's a major announcement that happens, it'll pop up on the screen. You'll see it, but you're not distracted or influenced by all those analysts that come on and all the different opinions that you hear on those channels. You don't need any of that. You strictly need your charts, and I'll show you why in a moment. Oops. I'm not sure what's happening with my slides here. Let's get them back in order. Second point is to trade with an amount that feels insignificant to you. The amount doesn't have to be insignificant. It has to feel insignificant to you. So for some of you, several $100s will feel insignificant. For others, several thousand will feel insignificant. But the point is that, most traders can pull the trigger on a trade, but fail to remain in that order for as long as they should. In other words, they get scared out early, or they make mistakes along the way. They misjudge the market along the way, and that usually has everything to do with emotions. If I asked you to put $5 into a trade, would you lose any sleep over that, or would you be able to manage a set of rules or follow a set of rules, to the T? Exactly. If I asked you to put 50,000 in a trade, it'd be a little different, wouldn't it? And that's because of emotions. I'm sure you've heard many times people say, take the emotions out of your trading. The only way I have found a way to do that is by reducing the amount that I put in a trade. In other words, as long as it feels insignificant to me, I'm totally relaxed. I'm not worried about losing that amount. It makes it so much easier to follow my rules. Now, to reduce our risk, I don't allow myself to ever put more than 5% of my account balance in any one trade. And the goal here is to start at 5%, but work your way down to 1%. In other words, as you build your account, the dollar amount going into every trade will increase, but that percentage should drop. So if you prevent yourself from putting too much in any one trade, again, it keeps those emotions out. And no matter what happens with that trade, whether it blows up on you or not, it doesn't hurt you very much. Now, there are things that are completely out of our control in the markets, and generally that makes us very uncomfortable. And I'm talking about the black swan events, the 9/11s of the world, right? Those events that we have no way to anticipate, and we have no control over them when they do happen. But generally, those are the events that cause traders to take the biggest losses. Well, one way we get around that is to make sure that we never put more than 50% of our total account into the market. In other words, we're always at least 50% in cash, right? That way, even if something like a 9/11, God forbid, were to happen again, the size of the loss we would take would be small. Why? Because first of all, only half of our account is actually active at any one time. And secondly, by us putting only 1 to 5% in any one trade, we further control that. And so our loss would be reasonable. And with Veracity or something like it, we'd be able to recover that amount fairly quickly. Okay, now last but not least, you should always spread out your trades. One mistake many traders make is on a strong day, and today's a great example, right? The market was down strongly. So if you run a scan tonight for trades, chances are you're going to find more short setups than long setups, right? So you'll find a slew of short setups. And if you jump in and short 7, 8, 9 of those at one time, and then tomorrow the market rebounds, and we've seen that happen over and over again. If that were to happen, you'd find yourself in a huge hole right off the bat. So what you want to do, regardless of how many potential trade candidates you identify for your time frame, you want to select one, maximum two of the highest probability trade setups for that one day or that one time period. Okay, spread them out. So again, 5 very simple rules to follow. If you follow these 5, you will never take another big loss again. Okay. Now, a couple other golden rules, we like to call them, and I always leave this slide on for those of you who are just starting your career in trading. Because we take such a small amount of risk, you can take small profits and still do very well. So at the beginning, I highly encourage you to bank your profits when you have them. Okay? Don't worry so much about staying right till the end and capturing the full move. Bank your profits when you have them. Why? Because that will allow you to grow your account a little quicker at the beginning. And not only will that give you confidence in the system you're using, but in yourself as a trader. And that'll take you a long way. Okay? Secondly, please understand that this is not about you. In other words, you don't control the market. You never did. You never will. None of us will. None of us know what's around the corner. So all we can do as traders is focus on execution. In other words, the one thing we can control is how much money we make when we're right compared to how much we lose when we're wrong. Okay? So if you follow your plan and you follow the Veracity rules, what you should end up with is a lot more winners than losers, but more importantly, much bigger winners than your losers. In other words, we strive to keep our losses very, very small and allow our winners to run. And let's talk about now Veracity and how it came about and what the makeup of it is. This came about as you know, my search for the Holy Grail. And I know looking back, that seems ridiculous because we all know there is no such perfect system out there. But like everybody else, you know, I was determined to find, you know, that perfect 100% system. Certainly didn't do that, but in the process came up with Veracity. And what Veracity is a number of oscillators and indicators that, when combined and when they all trigger at the same time, give you a very high percentage, low risk play in the markets, a very safe time in the markets to trade. That's what it identifies. Now, how do I know this? Well, through all the back testing and forward testing over the years that we've done with this system, right? Back tested many different versions. We've now been trading with this one for at least 8 years, if not longer, just this final version. And by forward testing, I mean actually trading it with real money. Okay? Ours, and we have numerous clients that have been trading with this for a while. From what I understand, even some of the support team at Metastock trades with this, which I'm really proud of. And by the way, Metastock has a great support staff. So if you're already a Metastock user, you know that by now. But let's talk about how it works and why it works. The difference between this system and any other that I put together was this one was really designed to catch the big moves. All the other ones focused on safety and trying to capture, you know, the middle portion of a move where it's very safe to trade. This one was really designed to catch pretty much the full move. And the beautiful part of this is that it does that more often than not, but more importantly, it still gets us out very quickly when things do not go our way. So we cap our losses quickly without capping our gains. Okay, so we maximize that safety component in every trade without sacrificing that profit potential. Okay, so what will it do for you? Well, not only will it help you identify some great short-term as well as some swing trading opportunities, but if you're more of an investor or are managing a retirement account, it will help you find some incredible long-term trades. I'll show you a few right now. And lastly, it'll also help you predict major market moves if you put Veracity on an index like the S&P 500. So speaking of that, let's bring up our Metastock platform and let's take a look at the S&P 500 here. Now we're on a monthly, and before I talk about how you would use this to not only trade day to day, but identify the market shifts, let's talk about what you see on the screen here. So we have this blue line, which is the 20-period simple moving average. Now we've added that as a default on the layout. Why? Because I love trading with the 20-period moving average. Reason being, not only does it usually keep us on the right side of the market, in other words, you can go back and look at as many charts as you like, but when price is above the 20, it's generally moving upward. If it's below the 20, it's usually dropping. And it's very, very consistent, okay? But what I'm more interested in with the 20 is the slope, all right? When a stock has momentum behind it, okay? And by the way, I shouldn't say stock, I should say market, because you can use this on anything. Stocks, futures, Forex, you know, trade options with it. Anything you can chart, you can use Veracity with. But when there's momentum behind a stock, you know, that's usually when you get a strong push, right? It works the same way to the downside. When you have strong downward momentum, right, you're really selling off hard, and that's where we get the slope. Now we can measure that momentum by just drawing a line across the candles, right? But if at times, and this happens many times, when you get a pullback, right, a temporary retracement before a continuation of that trend, you know, if we're drawing a line just simply across the candles, to judge momentum. Then when it comes time for that retracement, we see a sharp pullback, and it's easy to misinterpret that as downward momentum, right? So we may think at that point that the market has shifted when really it's just taking a breather and giving us another opportunity to enter before continuing or adding to its move in that direction, right? And so the 20-period moving average does a very good job of helping us not only identify that current trend, it helps us judge the amount of momentum by the slope, and it helps us remain in a position throughout minor pullbacks, okay, so that we can take advantage of the bigger move. All right, so that is a standard on our layout. Now, in addition to that, we have these little green and red diamonds, these green and red arrows, and these little green and red exit flags. So the diamonds represent what we call a setup bar. That is meant to just give you a heads up that, hey, a trade may be coming soon. This is not when you want to jump in, but you should be on high alert that it may be followed up by an arrow, which is when you would want to jump in. So not every diamond will be followed by an arrow. Why? Because that formula that we have programmed into Veracity did not line up accordingly. In other words, all those indicators we were looking at, maybe there's one or two that didn't fall in line with the others. So it's not a perfect setup. So when those do fall in line, you will get the heads up notice here. And then within one or two bars, you'll see that arrow that will tell you, hey, it's time to jump in on that trade, okay? And then that exit flag will get you out as soon as things start going against us. And you'll notice as we flip through numerous charts here today that it reacts very quickly. In other words, it cuts our losses quickly. That results in multiple setups and exits. So there will be times where we have a setup, we have a trigger, we jump in, and it tells us to get out right away, and then immediately tells us to get back in, and then sometimes takes us out right away. And that's fine. First of all, the intent here is not for you to take every single trade. There are two or three training classes that come with the Veracity indicator here with Metastock where we will teach you exactly which ones to take and which ones you do not want to take. But to make it easy on you, and especially during this short presentation, what you want to focus on are the setups and the triggers that happen right near that 20-period moving average when it is sloping in one direction or the other. So in other words, only look at taking trades when there is a slope in that 20. Now, I look at about a 45-degree angle like we have here. I consider that a very significant slope. Sometimes you'll see a much sharper slope higher, which is even better. Sometimes you'll see, less of a slope, but it's still okay. It's those times when the moving average is flat that you do not want to trade. The only time you want to take one of these setups here when we have a flat 20-period moving average is when we've been in a channel for a bit of a time, when we've been consolidating, and now that arrow is associated with a bar that is breaking above the high of that range. Okay, we do want to take the breakouts, and we do want to take the ones that have strong momentum on our side. Okay, now I said earlier that if you follow an index like the S&P 500, you can identify shifts in the market. In other words, on the monthly time frame, when it calls a long trade, you're in a bull market. When it calls a short trade, you're in a bear market, and you can use that to help you with your trading. In other words, if even if it was during the middle of this here, you didn't catch this trade, but you look at the S&P 500 on the monthly, and you can say, hey, Veracity's on a strong run here. That's when you can go back to your daily time frame and pick off those long setups on individual securities only to the long side, right? Not focusing on the short side. So it can tell you which side of the market you want to be on, all right? In addition to that, again, if you're focusing on the higher time frames, you're more of an investor, you're managing a retirement account, it will help you identify some incredible trades. Let's look at, the Amazons of the world, or some of those big tech stocks that have taken us so high, so far with this last bull run. Look at some of these trades, and this is what Veracity was really meant to do. In other words, when things are flat, yeah, you'll get triggers that'll get you in and out. If anything, there'll be break even or very small losses. And again, we do not want to take all of these, right? We only want to take the ones breaking out above a high, right? Or simply wait until we have some slope on that 20, okay? Well, again, we'll go over it in much more detail in the training classes, but it's those big moves that we're interested in. So if you look at really from 2014 on, when Amazon got started, you can look at 2012, which was the start of this bull market, okay? If you look from 2012 to today, and you look at how much of that portion, how much of those months we were in on Amazon compared to not being in the market or being on the wrong side of it, you can see for yourself was quite the run. And this may seem rare. You may think this is rare, but this is quite common with Veracity on, on all time frames, but this size of a move, especially on the monthly. Again, what you don't want to do is give up all your profits after you've made a nice move, and that's why it gets you out very, very quickly. Okay, here the exit flag appeared way before the bar closed here, but it gets you out very, very quickly. And then here's one of those times where we're breaking above a previous high, even though we don't have that slope in our favor, and it just took off, right? Nike's another one. Look at these trades. So fantastic. By the way, I didn't mention it. If there are symbols you want me to look at, something you like to trade, something you're in right now, you want to see how Veracity would have treated that symbol, type it in, and I'll be happy to show you that. Excuse the dog. He's excited. He heard the front door. Someone's coming in and out of the house. Here's Nike on a daily time frame. Okay, this works on any time frame, any market. Again, you can see that if you focus on the trades where there is slope on that 20, telling us there's not only a clean trend at the time, but momentum behind that stock. By momentum, it's like having the wind at your back, right? Pushing you forward. That's what's happening to these candles. And it's really buying pressure. That's what it means. So as long as we're above that 20 and we have that slope on that 20, we're good to go. And you can see some real nice trades in here. Now, when we roll over, and you can see at the time here on Nike, there was a slope downward, about a 45-degree, a pretty significant slope. But more importantly, if you look at the candle that was identified with the, not only the setup, but the arrow, the trigger, we're breaking below that previous low. So it's a breakout. And look at that. We would have captured just about the full move of the drop in late February, early March, right? That strong sell-off. And look what happened when the market started to turn. It got us out immediately so we can keep those profits. To me, I'm more proud of the exits than I am of, the entries here, because a lot of times it's easy to identify using basic technical analysis when a security is about to take off, but not giving back your profits or getting scared out part of the way, that's the real challenge as a trader. And the other thing we do, if I didn't mention it earlier, but you may have noticed, is that when it identifies a trade and actually triggers, every candle after that, or every bar after that, as long as we're in the trade, is colored green for a long trade or red for a short trade. And that's done intentionally. That is to help you remain disciplined and not get scared out along the way. A lot of times something will trigger, a couple candles will go your way, they'll be green, and then suddenly you see a couple of red candles, you start questioning your decision, you start panicking, you get out only to see the stock turn around and continue to move higher. So here, as long as you see a green candle. Sorry?
Is it a good time to give you a few symbols? You had asked.
Oh, yeah, absolutely. Absolutely.
Okay. I'm just going to give you a bunch of them out of YouTube so that you can kind of hit them as you want. Tony wanted to look at the Nifty. CL wanted to look at the NVAX.
NVAX, yeah.
Nifty and the NVAX. Lewis, funny enough, wanted to look at RCL, which is a little bit funny because it's an ongoing symbol that we look at a lot here in Nasdaq right now. But also crypto wanted to know what time frame you would double check for a confirmation for the trade.
Okay, so a lot there. First, Jeff, the symbol for the Nifty. I mean, I've traded the Tasni market in Saudi Arabia. I can tell you it works very well. I have a student there right now, and I've traded in India before. But the actual symbol on Metastock for the Nifty, if you can remind me.
Yeah, that's a good question. I just typed in Nifty in the search box, and if you wanted to look at the Nifty 50, it's .NSEI.
NSEI. Okay.
Yeah, period though first.
Yeah, period first. Okay. Let me look at Novavax first here, and then I'll get to the Nifty. And for me, over the last several years, I focused really on the daily time frame. Now, again, you can use this on any time frame. I always say that the way you decide on which time frame to trade is by how much time you can devote to the market. So if you can be in front of your screen and want to be in front of your screen all day, every day, you can go down to 2 minute, 5 minute, etc. Now, most of the time you're going to be sitting on your hands because there's a lot of quiet periods. It gets quite boring. At least that was my experience. I did that a long time ago. I prefer to spend a very small amount of time running a scan, which I'll show you near the end of this presentation, how quick and easy it is to identify those opportunities. Then jump in there with a few orders and then walk away, go do other things and come back. And at the end of the day, just review them and look at it and say, hey, is there still a green bar here? Do I stay in or do I make adjustments, right? So that's why I like the daily time frame. But as you can see here on NVAX, we were flat for the longest time. This is the kind of pattern that I look for on a monthly time frame because there's a lot of stocks that were beaten up. Then they go into a consolidation for many years, and then they start to recover. And if you just identify a very long flat period like this and mark the high of it, okay? Like in this case, it was back here, the high. So if we take that line across, then it's a break of that channel that matters. And that's where that first real signal was. Now, it got us in and out a couple times. It was flat. But again, see how quickly it gets you out when it notices that things aren't going according to plan? You can always feel very comfortable that it's there. There's always that potential of a gap against you. Yes, that exists always. But more often than not, you don't have to worry about that. It'll get you out very quickly. And then you can see that from this move, from that breakout to where it is today, which the breakout was, in the $10 area. And we're just, well, we topped 80. We're at 77.50 right now. If you look at that, the only time we were not in this was on these pullbacks. You see that? So it got us in, got us out before it went against us, then got us back in, got us out before it went against us, got us back in, got us out before it went against us, and then got us back in for that ride, right? So this is the beauty of Veracity. Let's look at NSEI, the Nifty here, 50, and see how it did there. And there you go. So look at this. I can bring in more data. We can look at different time frames, but look at the number of times you were in on these trades, what portion of that move you captured compared to not, right? There are times when you miss it. But you see the beauty here, we fell off a cliff, it was a breakout, we captured that full move lower, got us out before we gave back those profits. And yes, we didn't participate in the full move here, but that's because not all indicators were lining up beautifully. Then we turn around and now we're off and running again. But again, it's that slope on the 20 that you want to follow, and those entries near the 20, and go from there. Avoid the ones that are flat unless they're breakouts. I'm not by any means saying this is 100%. It's not. Okay, you will have losers. That's part of doing business and trading. The key is to keep your losses small and allowing your winners to run. Just imagine how many losses sorry about that. Imagine how many losses, if you did take everything, would be overcome by one winner, right? Just imagine that. And you're not going to take every one of these trades. You're not. We're going to teach you exactly which ones to take and which ones to not, right? So this is the beauty of it. And the other thing I will tell you is that when you bring up a symbol, right, and you see that it's setting up, you want to look back and you want to see how well it did on that particular security. It works well. It works better, I should say, on the securities with higher volume and more liquidity. So if you get an illiquid stock or market that isn't traded much, you know, the signals aren't going to be as accurate, but you can identify that by just looking back and seeing how they work. So Jeff, let me know if you have other symbols. I see, oh, hey, Dorcas is with us. Dorcas, how are you? We haven't spoken in a while. Hope you're doing really well. She's asking me to look at BBBY here. Absolutely. I'm glad you joined us today. That's great. And Bed Bath & Beyond, have a look here at some of the moves that I captured going back to last May, about a year ago. Significant downward slope here. And let's see if I bring in more data. Yeah, we had made the shift from higher highs and higher lows to lower highs and lower lows. Then momentum followed. That 20 followed, got us in there. Look at that. It retraced a couple of bars. It quickly got us out, right? So that's the safety net. You would have captured all those profits. And then when it identified that, you know, it wasn't really going to go on a run higher, we set up again to the downside. We captured it again. Okay, tried to get us out here. It got us out before the very end, but pretty much look at that. From start of the move to the end, we captured 90% of that. Then we went on a bit of a run here. Some of these, you know, when you see a gap like this, even if you see the arrow and it's further away from the 20, I personally wouldn't take that trade. So I would not have captured this move, okay? But again, I don't worry about the ones I miss. I worry about the ones that I catch. And there was another real nice one down here and one recently. So it's starting to move higher once again. And again, you can look at different time frames if you want. That's the weekly. Here's the monthly. You know, and again, it doesn't always capture the move, but this is why I want you to look back when you are thinking of taking a trade on that particular security. But thanks for that, Dorcas. Oh, she also was asking for the gold spot. The symbol for gold futures is capital G, capital C, and then a lowercase v for volume and the number 1. What this does, it gives you the gold contract with the highest amount of volume, which is the one you want to trade anyway. And this is a bit of history here on gold futures. Again, you can see that's quite nice. And now, more importantly, you know, we were in a channel here and we're just breaking above the high of that channel. We're in that trade, but it's pulling back to retest that level. So it's going to be very interesting to see if gold holds this level now and then turns around and starts going higher. But I really like gold. I think longer term, there's a real risk stocks sell off even harder than they did today. And gold does very well. If we look at a longer term chart of gold, here we are. We were in consolidation mode here for quite some time. And now we are back off and running to the upside. And very little resistance left overhead. So we're almost at that all-time high. I think we get there, and I think we go even higher longer term. So I really like gold here. How many of you trade Apple? Probably all of you or most of you. A very popular stock, does exceptionally well. Again, we don't capture everything, but for the most part, we do, and it does extremely well. Oh, my apologies. I overlooked RCL for one of our YouTube viewers, Royal Caribbean. Let's look at RCL. And, RCL has obviously been in the news a lot because when we first had the COVID outbreak and all the cruise ships had all those cases and then canceled all those cruises, this fell off a cliff like most stocks did. Again, it was a breakout with significant momentum lower, and there it is. And we pretty much captured and kept all the profits on that move. Now, it looks like it's headed back for a retest. We have not triggered yet. If we pull back here towards the 20 and the 20 gains some momentum to the downside, we'll end up having another setup there. But RCL, took a big hit here, but luckily we were able to capture it. Jeff, jump in at any time with other symbols, but yeah, I'll just go through.
I'm ready with them.
Oh, go ahead. Go ahead. Yeah.
Crypto had another question. Is it possible to get one time frame saying long and the other time frame saying short?
It is possible.
Oh,
yeah.
Okay.
It's very, very rare. Very rare. So it is possible because, for example, on a longer time frame, right? You may be still in, so throughout here, for example, on RCL between 2012 and 2015, we had a strong uptrend going, and the monthly, on the monthly we were capturing that. But if you go to a lower time frame, like a daily, there's going to be retracements along the way. No stock goes up in a straight line, and some of those pullbacks, the stronger ones, it will cause some shorts there. What I like to do, if you want to avoid that and you want to be safe, just take 3 time frames and make sure that they're all lined up properly. In other words, since I trade on the daily, I will look for confirmation that the weekly and the monthly also are not necessarily in a long Veracity trade, but are trending higher with momentum. So in other words, prices above the 20 and the 20 is sloping higher if I'm taking a long trade on the daily, right? You want to confirm that. That's a way to be as safe as you possibly can in this market.
Perfect. CL Ruff says EHTH? eHealth?
HTH. Let's have a look.
He also says, thanks in advance, I'm cutting hair right now. And I'm wondering if he's giving himself a COVID haircut or if maybe he's a barber by trade. If you'd let us know in the comments when you get a chance, CL, I'm really actually curious.
Sure. And here's a great example of a stock that you can tell just by the bar size, right? When something is trending consistently or has hit a period of extreme volatility. So compare the size of the bars throughout this move or this move compared to what they've been here recently. And this is what I'm talking about. If you see this kind of behavior, regardless of what the Veracity signals are giving you, whether they're giving you big winners or not here, do you really want to trade something like this? I'd be very hesitant to trade something like this. So at a minimum, what I do is mark the high range and mark the low range here for the majority of those highs and lows and wait for a break one way or the other. So if we were to get a move below here with a red arrow, yeah, and this kind of momentum lower, then yes, I'd be interested in taking that trade. But remember, what technical analysis is really revealing to you is the difference between the buy orders and the sell orders, meaning at any given time, buyers are going to be in control, and at other times, sellers are going to be in control. You want to identify those times and go with the flow. Your biggest risk is getting chopped around. So when you're trading, when the 20 period is flat, right? That's one of those times where it's consolidating and you're going to get the back and forth, which you want to avoid. But when you get this kind of channel, this kind of extreme volatility back and forth, you're asking to get slapped around in the market. You do not want to be part of this, okay? Don't try to call the very bottom and call the very top and go back and forth, back and forth. Make life easy on you. Mark the range, the high range, mark the low range, and wait for a breakout one way or the other. It'll pay off in spades, trust
me. Let's see, we have one more. Marco wants to know if you could look at SDGR.
I'm sorry, SDGI, was it?
R is in radio at the very end.
R, okay. SDGR.
That's right.
Okay. This dot SDGR or?
He didn't say dot SDGR, but that's the.
It might be. It might be. I don't know. Let's see.
Take a look at it. Yeah. And if you do have the name markup, that might help.
Yeah, let us know. Let us know. So, not familiar with this one. Let's see if we can bring in more history. We had part of this breakout, got us out quickly, never did get us back in, so we missed that portion. But again, if you look back, you know, some pretty decent signals along the way. Again, focus on the ones that are either breaking out or have that support of that 20-period moving average. We recently had a setup but no trigger. Now it looks like we're continuing to sell off here. I've noticed this pattern in a number of charts, especially the financials. If you look at banks, a lot of them have this pattern where we recovered about half of that late Feb, early March sell-off, and now we've reverted back to lower highs. And today, a number of them took out a low, which means we now have lower highs and lower lows. So keep an eye out for a retest of the March lows coming up on numerous charts. It looks highly likely to me right now. Let's see. Looks like Tim is asking for, is it PayPal? I think it's PayPal he's asking for. Yeah. And let's zoom out a little. So, or actually too far. There we go. Again, when you get a nice stretch, it's that 20 that's sloping on these pullbacks, you get in. So we got in here, it got us out quickly, pulled back a little more, got us right back in, etc. This is where, you know, this is your bread and butter. This is where you're going to make most of your trades. Focus on that slope, okay? Just like here, no brainer. Pull right back to the 20, very, very significant slope, and off it goes, okay? Louis, okay, SDGR, let's see, maybe, no, I don't know why. Oh, maybe it was this. Is it a newer issue? I don't know. The reason why you may see this on newer issues is...
that looks better. He was saying it's Schrodinger, which lines up with what we're seeing up in the top. So
that's right.
I'm glad you find it. I've been looking at it, looking for it for a while now. So good.
Yeah. Now the reason why you're not seeing any previous setups or triggers on this is we need a certain number of bars for the indicators to calculate that formula that was programmed in. So on your issue, you will have to wait for a while before Veracity starts calling signals. Of course, throughout this time, when it first goes public, you know, like a lot of those IPOs, you know, those first few days or few weeks have really intense volume and a lot of back and forth. If you go on the lower time frames, if you go on the 2 minute, the 5 minute, the 1 minute, or 15 minute, yeah, there'll be many setups there because, you know, you'll have tons of bars for it to calculate on. But on the daily time frame or higher, you're going to have to wait. But right now, this called the trade back here, just around the 70 mark, and we're you know, we hit 85 and are currently at about 82 or so. So not bad at all. Let's see what else. I'm trying to look at my Spotify. Who was looking for Spotify? Derek, I think. Let's have a look at Spotify. And then I apologize, I'm short on time here, so I do want to show you a couple of other features with this that are fantastic. Here we go. Look at the last couple of trades. How easy is that when you have that kind of slope, you have a nice pullback, you set up, and then it's just all green bars from there. And when it starts going against you, it gets you out, comes back a bit more, gets you back in, and off we go. This is exactly what you want to wait for. And this is a great lead-in, actually, to what I wanted to show you next, because what you may be thinking is, how do I find these trades? Well, Jeff and his team have made it very easy. If you go to the Power Console here, the top left, click that P, and click the Explorer tab. Now, on the Explorer tab, you want to scroll down to the bottom. Here are all the formulas or strategies programmed in. It's in alphabetical order, so mine are at the bottom. Now, you're going to notice that for Veracity, there are the setups and Veracity signals. The setups refer to the diamonds. The signals refer to those arrows, the trades that have already triggered. So I like to get a heads up on the trade and scan for the setup. So we'll click that box. Then we'll go down here, and this is where you select your market. Again, you can select any market you like worldwide here. They have everything. Just for demonstration purposes, I'm going to select the 30 stocks in the Dow Jones 30 and the 100 in the NASDAQ 100. And let's see, do I have anything else marked off? Oh, the major Forex pairs. Okay. Then you go to the right, you select your time frame. Again, it can be any time frame. I'll scan through daily, hit start, and you're going to see this very quickly start running through the chart. So I have 164 charts on my scan list here, and you can see how quickly it's going through it. So in a few seconds, it's going to populate the results. It's going to populate the ones that match the Veracity formula, and then the ones that were not a match. So 5 were a match, 159 were rejected. Okay. Now, you see that the columns, there's a long and a short. Whichever one has a number 1, that's the type of trade setup it is. So we can click on long, and there are 2 there, and there are 3 shorts here. So you can sort again by clicking these columns. You can sort by price by clicking the close, or here's the important one, slope. This is the slope on the 20-period moving average. So we can click on slope and sort these. What you want to look for is the highest positive number and the highest negative number as well. Now, because we had been moving higher dramatically over the past couple months, now we're starting to roll over. One strong down day doesn't give us that many short setups. But if this continues over the next day or two, you will see numerous of them appear. But again, it's so easy to identify that slope just by looking at that number. You can highlight it, click open chart, and you'll see what kind of slope there is. This has had a setup now, which is rare. 4 times here recently, still has yet to trigger, okay? So wait patiently, don't jump the gun there. Coke has a short setup, albeit not much of a slope. But again, you can look for a potential breakout there. And look at that. If you mark that previous low, we could be on the cusp of a breakout to the downside. And if we do, guess where we're likely going? The March lows. So very quick and easy to identify some great trading opportunities. The other thing that I want to show you is if you go to the top left here, click View and click Expert Commentary, it's going to bring up this box where it talks about trading wins and myself, gives you some background information. But more importantly, there's this little black triangle that appears, and it always defaults on the most recent bar, just above the most recent bar. Now, if it's in a trade or a setup, it will populate text here between these two paragraphs. Now, if it's a short setup, it's going to do it in red ink. If it's a long setup, you're going to see green text here. Okay, we keep everything consistent. Now, here it's telling you that there's a short setup, a potential short setup, but to confirm that this is a valid shorting opportunity, you must wait for a trade below the setup bar's low. Okay, so by looking at this candle today, we can see that the low is 44.50. So if tomorrow when the market opens, Coca-Cola trades below 44.50, you're going to see that red arrow appear and it'll be time to short that stock. And the reason why we highlight this for you is some of you may not be able to watch the market in real time all the time, right? You have jobs to go to, you have family commitments, so you can at least set up orders overnight to trigger if they pass that key level, right? Now, and you can move that arrow by either clicking above any bar or candle or by using the arrows up here on the commentary box. And if there's some time when there's no trade, you'll see a blank space here. If there's a time when the trade triggers after here, not only will this tell you that it's triggered, it'll give you, let me go back to the actual bar where it triggered. Yeah, it'll give you some information if you're an options trader, what option strike, what delta you may want to consider here. So it's very helpful that way. But then if we follow this along, with every new candle that it adds, you're going to see here that it's giving you an exit price as well ahead of that exit signal. So this is meant to work as a trailing stop. Okay, so if you can't watch the market and you want to use a trailing stop, it will tell you where to put that trailing stop. So 54.09. And then as we advance, as long as it moves to new highs, you see now it's moved it to 55.42. And then it continues on. And a few candles later, now it's at 56.57. So it's going to really help hold your hand throughout the life of that trade. So it's really, really helpful. I love the way Metastock's designed it. And on that note, I'm almost out of time. So I'm going to ask Jeff to come on and tell you how you can get a copy for yourself and add whatever he'd like. And of course, I'll stick around in case there are more questions. Jeff?
Let's try and unmute the microphone. First of all, that'll help, right? Yeah, let me go ahead and just kind of talk a little bit. Hold on a sec. I'm gonna go ahead and take over the controls just a second.
Sure.
All right, very cool. Let's go ahead and move you over here and push that. All right, very good. Okay, ended up going a little bit back here. I do want to talk a little bit about what's included in the Veracity program. It has been, as I said a little bit earlier, one of the most successful add-ons we've released. It's been very, very popular. People like it so much, and it's even used very widely on most of my sales staff. So I would encourage you to try it. What we do with it, normally it's a $2,000 program. If you bought it, you can own it. It's $2,000, and that's a one-time cost. You don't have to keep paying for it over and over and over again. It's designed to plug into your MetaStock program. What we're going to do here as part of the webinar special is we're going to give you the program for $1,000 off, for $997 here. Not only that, we're going to back it with our own 30-day money-back guarantee. So we let you play with it, we let you install it, we let you run it. If it's something that you like, or if it's something that you helps you make money, keep it. If not, we offer a refund. And I'll tell you, we don't process a lot of refunds for this. There's a couple of different ways you can order. You can give us a call, 800-882-3040. You can visit us online at metastock.com/tradingwinds. V is in volume, or Veracity maybe, or Vora, or Vince, I don't know. You can also visit us online. We've got reps that can answer your questions. They're waiting to talk to you at metastock.com/saleschat. The other thing that I would point out, this is an add-on for MetaStock. So if you don't have MetaStock and you haven't heard of it, one of the things I would tell you about MetaStock is MetaStock's been rated #1 in its price category for 27 years, basically in a row. It's been it supports markets all over the world. It does scanning, as Vince showed you. It does the expert advice. It has a really good system tester. It's a great product. There's a reason it's been rated #1. And so if you don't have MetaStock and you want to try out this Veracity, see how it can help you, we're going to also throw in a copy of MetaStock, a 30-day free trial for you to go ahead and look at it. We're going to have somebody help you install MetaStock. We're also going to make available a whole bunch of training stuff to help you get up to speed with MetaStock. So metastock.com/tradingwindsv, 800-882-3040, or metastock.com/saleschat. So that's what I have to say about that, Vince. You did a really good job of talking about the program. There was a question that I did want to ask you if you're still here.
Yes, I am. Go ahead.
So I thought this was an interesting question. I have an answer that's easy, but Dorcas wanted to know, or I don't know, he wanted to know if candlestick type patterns are incorporated as an indicator to Veracity. Does he have to recognize Japanese candlesticks to decide whether or not to take the Veracity signals? And that was basically his question.
Yeah, no, you can use any type of candle. What I was using on my screen were the open, high, low, close candles, or the bars, I should say, but you can use candlesticks, or any other type you want. The signals are not based on the candle patterns, but like anything else, if you're familiar with them, candlesticks bars do help you identify, whether sellers are in control or buyers are in control. So you can put the two together. You can also look for chart patterns, different chart patterns, or use trend lines to help you compare one trade to the other. See, like tonight on the scan, out of those 159 charts, we had 5, right? Generally, you get a lot more. And so your job is to select 1 or 2 out of those, right? The highest probability one. So what we spend a lot of time on during those training classes is how to differentiate one to the other and select the one that's going to give you the best odds of success, right? So you can incorporate many different aspects. So charting patterns, trend lines, support, resistance, candlesticks, all of those. We'll talk about all those in the training classes that you get with the indicator.
All right, that seems to be most of them. Vince, I want to say thanks for coming in today. That was great.
Thank you, Jeff. Really appreciate you having me on again.
Thanks for releasing a product for MetaStock that everybody loves so much too, by the way.
Thanks for your help programming it. Did a great job.
All right. Thank you, Vince. For everybody that watched today, either through GoToWebinar or through YouTube, thanks for watching. If you're on YouTube, make sure to like and subscribe. It does help a lot with our algorithms. And we'll see you at the next one. In the meantime, stay safe, stay healthy.